because of what's happening with the US-China trade developments, there's a rebound that's taken place in metal names as well. So much to talk about today. Tushar Pradhan, the CIO of HSBC Global Asset Management, joins us now. Tushar, hi, good morning, and thanks so much for being with us on CNBC TV 18. What did you make of the RBI's transfer of funds to the government? From a market standpoint, what would you want to see that funds be used for?
Yeah, I think we've had a very, very bad month, I would say, in terms of the developments and the kind of sentiment that we've seen. I think there was a lot of questions raised in terms of the government's ability to reach the fiscal target. There were pressures building up in the economy which told us that the government was really going to struggle to raise the revenues as targeted in the budget. And I think the current announcement seems to indicate that there is going to be a lot of confidence for those numbers to be achieved. So I think as a market, as a sentiment, I think there's a dramatic change in terms of how people view fiscal finances from here on. I think clearly there is some method to this in terms of how the transfer does happen and what the impact will be, which from my point of view is not really as clear. But the fact is that the headline seems to be very positive. I think the market is taking a lot of confidence from the fact that the government is really intent on trying to correct the issue, trying to raise resources in a way to ensure that the economic development starts in earnest. So I believe this is a day to enjoy. I think the sentiment has clearly turned positive.
Okay, just pull out a contribution plate once on the Nifty, and just to reiterate, I mean, that was logical and common sense in the morning, but if you see what's happening on the index, Larsen and Toubro started to move up, so 7-point contribution. Reliance, which corrected yesterday, but SBI, so banks, economy-facing stocks doing well. On the right-hand side, you can see only IT names: Infosys, TCS, HCL Tech, and Tech Mahindra. Now, we've seen this play out in the past as well. When the markets go through this phase, money is taken off IT and put into some of the domestic stocks. Today, of course, Infosys buyback ending is also a bit of a negative, and with so much rally. So that trade has beautifully played out. But Tushar, good morning. Do you think that trade has reversed for good, or are there still enough headwinds for some of these domestic stocks?
See, I think one has to be very clear that whenever a big event or a news item like this hits the market, there is a lot of noise. So currently what we're seeing is the impact of that noise. Once the noise settles down and one realizes what is there in the long, hard road ahead of us, I think a lot of these numbers and these prices actually do get adjusted to a more reasonable valuation. So it's very difficult to say today that all of that is now just a reversal. Now we are back to the economy-led stocks and it should be only green from here. Obviously, we know that going into this week, we had identified a lot of issues with the economy. There was a dearth of demand across the industry, especially in consumer-facing industries. We were really grappling with the fact that what are the issues which will impel the economy forward. All of these things were just as fresh as last week. Now, what has changed overnight? I don't think the economy changes overnight like that. But I think the signal clearly is that there is some impetus which is there. May not be in the stimulus that people most expected for, but clearly there is a lot of ammunition with the government to be doing something about the economy. So I think while this sentiment has changed, I think on the ground it will take some more time to understand which parts of the economy will really benefit. So I think let's enjoy the noise. The noise clearly is in the right direction right now. But I don't think IT suddenly becomes a very bad place to be. The currency has depreciated a bit. The demand for IT services globally continues to remain robust. So there is nothing wrong in that model as such. But I think clearly the preferences change given the sort of noise that we experience from a day-to-day basis.
Okay. A few things on the ground have changed. The cost of money has fallen. There is a moral suasion, at least, if not actual external benchmarking, that will probably make the cost of money cheaper for some borrowers. There is a 15% depreciation on commercial vehicles, on all vehicles. It will be used by the commercial vehicle guys. And government has promised faster refunds, faster release of payments. How does all this change your stock preference?
Well, it definitely does give a very positive spin, that's for sure. Because what we were really worried about, as I just spoke a little earlier, was the demand situation. And there were various reasons for the demand to not show up. It could have either been because of the lack of transmission of lower interest rates to consumers. It could have been for a lack of confidence per se. And, the scenario where GDP growth rates continue to remain challenged. All of that, as I said, is not going to change overnight, so we're not going to completely reverse our position from where we are. But clearly, I think given the indication, as we have seen so far, that the government is very intent, and the announcements last Friday also were very, very positive in terms of trying to correct the situation, which leads us to believe that there will be some sort of impetus coming from the government.
No.
And that will lead definitely to some sectors being, in a better position now than they were last week.
No, what I'm asking is, are you already buying any of the, say, two-wheelers or, realty stocks, the likely beneficiaries of cheaper money, faster flow of funds, infra companies, L&T? Have you already changed your preferences to this, consumer durables, infra companies?
That would be very, very early to say, I must admit, because just because the money becomes cheaper, my confidence doesn't return in a day. So I think I need to see things on the ground move before I can start moving in that direction. So to kind of place the bets ahead of any indication would be quite hasty. As we see that the cycle actually is quite structural. So over time, when you see a downturn in, say, automobiles, two-wheelers, that sort of thing, it doesn't kind of reverse overnight. So there is inventory to be taken care of. There are some other issues before we actually can see the transmission of that money going to the consumer for him to actually start buying. So it's going to take some time. It's going to take some time before the confidence returns. However, as I said, I think clearly the direction and the sentiment has changed. We will make portfolio adjustments in line with that, but I won't think that, suddenly we think everything is in and we've got a play on hand.
In fact, I was going through your top holdings in the funds that you manage. In the HSBC equity fund, you have Maruti as one of your key holdings. Of course, this is a stock that has undergone a lot of derating. But what did you make of the announcements that the finance minister made for the auto sector? You think it's enough to spur demand, or do you think more needs to be done?
Well, I don't think from the government side more needs to be done, because I think they've done whatever they can possibly. Now it is up to the economy to take the cue and move forward. So there are many things which drive consumer demand, especially in two-wheelers and cars. One is that the confidence of the consumer thinks that he is going to, have a secure future, which is the reason why he will go either for a loan to buy a car, or he gets that confidence to go ahead with the purchase. If he doesn't see that, it's not that he's never going to buy a car, it's just that he will defer his purchase. And this deferment can take 3 months, a year, and that's how the downturn really starts. So this confidence is very important. And I think once this confidence comes coming back, then I think we will see a marginal increase from here on. So I would think that it should be positive for companies like this. But again, as I said, one day doesn't do anything. We'll have to continue to wait to see whether that's translated into some real action on the ground. The government probably has done what it can do at this time. So we have to wait and see.
Okay. Your thoughts on broader market, Tushar. We've gone through a severe bear market and a lot of portfolios are hurting right now. You think at least that part of the market may have stabilized a bit going forward?
Well, I think when we talk about market stability, we have to understand that the market will be stable only when the denominator actually becomes quite clear. So what I mean by that is that earnings growth has to remain pretty robust. So if earnings don't come by, no matter what the sentiment is, then your market will actually become a little more unstable from here, which means that it might take some cue from the news, it may go up, the market multiple may expand, and that will be a very unstable return to what we saw earlier levels. That's not what is a much more secure signal. What I would think to see is to look at the earnings picture. As you mentioned, the broader markets. If the broader markets do deliver earnings growth, then I think we are coming back to a situation of stability, and I would think that that's a much better market to look at. But till the earnings picture improves dramatically, I think the stability in market will be largely driven by external events, by news such as these, and it will remain volatile for some time. But second quarter, And the third quarter is very critical from an earnings perspective, especially in the broader markets. If the companies do display pretty robust earnings growth, then I think we are on a good wicket.
Okay. What's your base case, Tushar? Just a week ago, as recent as Friday morning, it was all hell breaking loose, as you said. We were so downbeat on the economy. And even earlier this week, after the rally started, Shankar Sharma was pointing out that the global economic growth, while it is lower than last year, is still higher than the last 5 years. The world is not such a broken place, but our growth over the last 6 months is lower than the average of the last 5 years. So, we have a problem of growth. What's the base case on the markets? Do we really get very good equity gains, or is it best to be with gilts till the end of the year?
Well, actually, a good point that the Indian story has been weaker clearly versus the developed markets. So if you look at the US, for example, it's been on a very, very prolific growth path for the last 3 years at least. And earnings growth has been very robust in the double digits, which is unheard of if you look back even 10 years prior to that. So clearly something very dramatic is happening there. In our case, where we had double-digit growth for a considerable amount of period, for the last 5 years, as you mentioned, it's been very, very flat to negative, and the growth has just not been showing up. So how long before we say the base case starts to improve for India? I think if the cost of capital remains low, if inflation continues to remain undershooting the RBI's estimate, if adequate liquidity is available, and that's the time that animal spirits can take root. But if there is too much uncertainty, if there is too much of second guessing, too much of difficulty in terms of getting businesses started, so on and so forth, I think we will remain here for some time, and that's not very good news. But I think it's all up to us to take the cue, and if real cost of capital does come down, then I think we are back to the base case of having pretty significant earnings growth from here on.
All right, we will leave it at that. Thanks so much for joining us and giving us your views.